So the next asset we are looking at today is the USDJPY, and last week we also had some interesting situations too on this particular asset. But the new week, as we saw how the USDJPY faced continued selling pressure throughout the Asian session, and of course a general weakness in the US dollar in recent times, coupled with positive Japanese machinery order data and statement from the Japan's finance minister, posed challenges for the pair amidst unexpected thin trading conditions due to the holiday period in the United States. We learned the report from the Japanese economy, that is the Japan's machinery order, exceeded market expectations. I did mention this earlier. It rose by 2.7% in January compared to the anticipated 2.5%, hereby signaling an enhanced confidence within the Japan's manufacturing sector. Adding to the mix is the Japanese finance minister, Suzuki, has remarked in an interview recently, stating, and I quote here, I quote his words, he said the Bank of Japan holds jurisdiction over monetary policy, but there will be a phase when interest rate goes up. Now, this for me is a positive signal for the buyers of safe haven Japanese yen at this point, and I think this remark, coupled with the positive economic data from the Japanese this morning, is responsible for the current bearish momentum we're seeing on this particular asset. Now, at the National Association for Business Economic Conference, the former Federal Reserve official James Bullard suggested that the Federal Reserve should consider lowering interest rate at its March meeting to prevent stifling economic activity amidst rising rates. Now, this proposition comes amidst observation of a resilient US economy, as evidenced by the previous week's economic indicator from the United States. Now, this comment from the former Federal Reserve official has thrown in some indecisive situation into this market right now, and this may likely be a sign that the Federal Reserve may be considering interest rate cuts as early as the month of March, especially after the retail sales data came in below expectations on Friday. Now, with all these various factors we've talked about here, how do we intend to capitalize on the next move? Well, we want to understand how the market participants are behaving in this current financial landscape. Now, to do this, we want to have an holistic perspective into what is going on in this market. So our first point of contact is going to be on the daily time frame, and right here on the daily time frame, what I did was to take into consideration the nature of price action since mid-December of last year, and it is very obvious that price action has been bullish, and in fact I have a couple of ascending trend line after connecting the series of higher lows, but the major one we will be using is the one closest to the price action activity in recent time, and this is it right here. Now, in addition to this ascending trend line is our key level, which is situated at the 150.800 area, and in fact you will see how this zone had been a strong selling niche since last year October. Look at what happened around this area. As soon as price got here, we saw some selling pressure resume. We saw the same thing happen in the month of October. The price broke out of this structure at the beginning of the month of November, but immediately we saw price drop again to the downside. The same thing happened during the mid of November, and price dropped again. And during the course of last week's trading session, despite the strong bullish momentum, as soon as price got into the 150.800 zone again, we saw another selling pressure resume from that particular area. And what this simply tells us is that sellers are still very strong around that area, and unless price breaks out of the structure, we'll continue to keep the options of selling the USDJPY open. Now, scaling further to the downside to the 4 hours time frame, I was able to identify a trading setup that we will be using to guide our decisions. Now, on the 4 hours time frame, what I did on the 4 hours time frame was to consider how price action has been behaving since the beginning of this month of February, and it's quite clear that the market has been bullish. And after connecting the series of higher lows, we have an ascending trend line to work with. And you know how we use our ascending trend lines in this community. As long as price remains above this ascending trend line, we have no business selling this asset. Now, zooming into this current structure, you will see that in the last couple of weeks, last 1 week, I think, price action has been range bound, confined within the 150.800 and the 159.600 area to emphasize the prevailing uncertainty in this market. And usually when we have a range like this, we want to exercise patience and wait for price action to either break out of the resistance line for an opportunity to buy, or the breakdown of the support line for an opportunity to sell. Now, looking at what happened here since last week, Tuesday, we saw that selling pressure has resumed after price action tested that high at the 150.800 and leading into price action finding lower highs in this market, revealing the strength of sellers at this point. Now, will the various factors supporting pivoting from the current ultra loose monetary policy be a major reason why prices drop into the downside? Well, we never can tell, but we can use the structures to guide our decisions going forward. Now, as it is right now, the continued selling pressure, the series of lower highs, has led to the breakdown of this ascending trend line here, which shares a confluence with the 150.100 level. Now, the question here is this breakdown a true breakdown or a false one? Now, that is where patience is required at this point. Now, if you look at the structure here, despite the breakdown of this ascending trend line and the 150.100 area, you will see that sellers are still struggling to continue the momentum. In the last 16 hours or so, we have been seeing buy pressure around this area, further emphasizing that buyers are still present about around this point. So what we are going to be doing now is to scale down into the 1 hour time frame, where we will be able to see how market participants have been reacting to the structure since the new week began. Now, on the 1 hour time frame, you'll begin to see things more clearly. So what I did here was to try and see how market participants have been behaving since the new week began. Now, right here, you will see that the week began on a bearish note. As you will see, price started at around the 150.285 and dropped massively, breaking down both the ascending trend line and the 150.100. Now, despite the strong bearish momentum here, as soon as price got into the 149.875, we have been noticing buy pressure around that area, revealing that sellers are finding it difficult to continue the momentum that started this week. And as a result of this, we have a range to work with that is between the 150.285 and the 149.875 is where price action has been trading since the new week began. Now, the question here is, will price break down the support line here to incite selling opportunities, where the further breakdown of the 159.600 will welcome more selling opportunities? Or are we going to see a situation where the breakdown of this ascending trend line will turn out to be a false breakdown, where the price climbing back above the ascending trend line breaking out of that resistance line will welcome buying opportunities. Now, presently, due to the current situation, I have a sell stop order below the 149.875 to capitalize on the bearish move, and of course a buy stop order above the 150.825 to join an uptrend situation. However, we need to also understand what is going on within the range. Is this old pattern here projecting a situation where price will continue downside or to the upside? Now, from a technical standpoint, if we consider the breakdown of this ascending trend line, we usually expect that price may come back to retest any of the structure, maybe the ascending trend line or the 150.100, where it may incite the downtrend continuation. So I would like us to take this into consideration too as well. Now, if this happens, let's see if the market will find selling pressure around the ascending trend line or the 150.100 to join a downward move. So let's be very mindful, and please also note that we may likely see subdued trading activity due to the public holiday today, and in fact throughout the day we might see price just consolidate within the 150.100 and the 149.875 ahead of the Asian session before a traction comes in, maybe in the form of a breakdown to incite selling opportunities or breakout to incite buying opportunities. So pending the time that happens, let's continue to monitor price action within this range and let's see how it's going to play out. So if this range here we see higher lows around here, then we might want to be buying the breakout and retest of the 150.100 to join an uptrend move, and a further breakout of the 150.285 will welcome more buying opportunities. But if price breaks down the 149.875, we have no other choice than to start selling the USDJPY. So this is my simple view on this particular asset. If you have any questions, feel free to let me know in the comment section.